The date, March 10, 2025. A day etched in the annals of Wall Street history. A day that whispered of Black Monday and echoed with the ghosts of market crashes past. The financial world watched in disbelief as the Dow Jones Industrial Average plummeted, an unforgiving sea of red engulfing trading screens. This wasn't just a blip, a temporary dip in the relentless bull market. This was a full-blown panic, a market meltdown fueled by the unpredictable policies of one man, Donald J. Trump. The catalyst for the chaos? Trump's aggressive tariff policies, a volatile cocktail of protectionism and brinkmanship. The president, known for his unpredictable pronouncements, had spent the previous week rattling cages and stoking uncertainty. Threats of new tariffs against China, Canada, and Mexico hung in the air like a toxic cloud, suffocating any hope of market stability. The financial world, accustomed to Trump's bluster, had initially shrugged off the escalating trade war as just another episode in the ongoing reality show of his presidency. But this time felt different. The stakes were higher, the rhetoric more heated, and the potential consequences far more dire. As the opening bell rang on that fateful Monday morning, a collective shiver ran down the spines of investors worldwide. This wasn't a drill. This was the real deal. The numbers painted a stark and terrifying picture. The Dow Jones Industrial Average, the most widely watched barometer of American corporate health, plunged a staggering 890 points, a dizzying 2.08% drop that wiped out billions in market value in the blink of an eye. The intraday drop, exceeding 1,100 points at its nadir, was even more alarming, a free fall into the abyss of uncertainty. The S&P 500, a broader measure of the market encompassing 500 large companies, wasn't spared either, tumbling 2.7% for its worst day of the year. The tech-heavy Nasdaq Composite Index, home to the high-flying darlings of the digital age, suffered an even more brutal fate, plummeting 4% in its biggest single-day decline since September 2022. The carnage was widespread, indiscriminate, and relentless. Every sector, from finance to healthcare to energy, felt the sting of the sell-off. The gains made since the November 2024 presidential election, a period of cautious optimism fueled by hopes of a return to normalcy, were erased in one fell swoop. Fear, the most contagious of emotions, spread through the market like wildfire. The CBOE Volatility Index, Wall Street's aptly named fear gauge, spiked to its highest level of the year, a clear indication that investors were running for cover. At the heart of the market meltdown was Donald Trump, the architect of chaos. His weapon of choice, tariffs, those blunt instruments of economic warfare that had become a hallmark of his presidency. Trump, convinced that America was being taken advantage of by its trading partners, had embarked on a crusade to rewrite the rules of global commerce, often with little regard for the potential consequences. His latest salvo, a barrage of threatened tariffs on goods from China, Canada, and Mexico, had sent shockwaves through the global economy. Businesses, already grappling with supply chain disruptions and rising inflation, were left reeling, unsure of how to navigate the unpredictable terrain of Trump's trade war. Adding fuel to the fire were Trump's own words. In a rambling television interview just days before the market plunge, the president had spoken ominously of a period of transition for the American economy, refusing to rule out the possibility of a recession. His words, coming from a man who had built his political brand on promises of economic prosperity, sent chills down the spines of investors already on edge. No corner of the market was spared from the carnage, but the tech sector, long considered the engine of American economic growth, was particularly hard hit. The so-called Magnificent Seven, Alphabet, Amazon, Apple, Meta, Microsoft, Nvidia, and Tesla, once symbols of American innovation and market dominance, found themselves on the receiving end of the sell-off. Tesla, the electric vehicle maker led by the enigmatic Elon Musk, suffered a particularly brutal fate, its stock plummeting a staggering 15.4%, erasing all its gains since the November 2024 election. The company, already facing increased competition from Chinese EV rivals, seemed particularly vulnerable to the whims of a trade war. Nvidia, a leading manufacturer of graphics processing units used in everything from gaming to artificial intelligence, also took a significant hit. The company's dependence on global supply chains and its exposure to the Chinese market made it a prime target for investors spooked by the escalating trade tensions. Section 5. Expert Opinions, Voices from the Financial Trenches. As the dust settled on that tumultuous Monday, financial experts and market analysts struggled to make sense of the carnage. Anthony Saglambine, chief market strategist at Ameriprise, summed up the prevailing sentiment, noting that Trump's comments had unnerved investors. The president's unpredictability, once a source of perverse amusement, had morphed into a genuine threat to market stability. Ed Yardeni, president of Yardeni Research, echoed those concerns, observing that the stock market is losing confidence in the policies. Trump's go-it-alone approach to trade, once dismissed as bluster, was now being viewed as reckless and potentially catastrophic. Gina Bolvin, president of Bolvin Wealth Management Group, offered a sobering reminder that stocks overextend on both the upside and downside. The market, after years of steady gains, was long overdue for a correction, and Trump's erratic policies had provided the perfect catalyst. David Bahnsen, founder of the Bahnsen Group, cut to the heart of the matter, noting that tariff chaos fosters uncertainty. Businesses, faced with a constantly shifting landscape of tariffs and trade barriers, were hesitant to invest and expand, further dampening economic growth. Section 6. Beyond the stock market, distress signals echo in the broader economy. The market meltdown wasn't just an abstract financial event, it was a symptom of a deeper malaise, a growing sense that the American economy was teetering on the brink. Beyond the flashing red numbers on Wall Street, there were other, more tangible signs of distress. Layoffs were on the rise, with companies across various sectors announcing job cuts, a stark contrast to the robust hiring that had characterized the pre-Trump era. Hiring, once a bright spot in the economy, had slowed to a crawl, as businesses, uncertain about the future, opted to hoard cash rather than invest in growth. Consumer confidence, the lifeblood of the American economy, had plummeted to multi-year lows. Americans, bombarded with news of inflation, trade wars, and market volatility, were tightening their belts and bracing for the worst. Section 7. A global shudder, international markets react to the American earthquake. The shockwaves from the American market meltdown reverberated across the globe. European markets, opening for trading on Tuesday, March 11th, initially showed little change after the U.S. sell-off, but the mood was tense, with investors bracing for further volatility. Asian markets, catching the tail end of the American panic, experienced initial drops before staging a modest recovery. Japan's Nikkei 225 index closed down 0.6%, while South Korea's Kospi index fell 1.3%. The U.S. dollar, often seen as a safe haven during times of global uncertainty, weakened against the British pound and the euro as investors sought refuge in other currencies. The global flight to safety pushed down yields on the 10-year U.S. Treasury note, a traditional haven for investors seeking shelter from risk, to 4.225%. The message was clear. The world was watching, and it was worried. Section 8. The White House responds, a chorus of denial amidst the ruins. As the financial world reeled from the market plunge, the White House remained defiant, dismissing the sell-off as an overreaction by a skittish Wall Street. Howard Lutnick, the Commerce Secretary and a staunch Trump ally, denied the possibility of a recession, insisting that the American economy remained strong. Kush Desai, a White House spokesperson, echoed those sentiments, claiming that industry leaders remained positive about Trump's agenda and pointing to significant investment commitments as evidence of continued confidence in the American economy. The White House's response, however, rang hollow to many, a desperate attempt to spin a narrative of strength amidst the wreckage of a market in freefall. Section 9. A glimpse into the abyss, lingering uncertainty, and the long shadow of doubt. The market plunge of March 10, 2025, was more than just a bad day on Wall Street. It was a stark reminder of the fragility of the global economy and the outsized influence that a single individual, armed with the levers of power, can have on the fate of nations. As the dust settles and the markets attempt to find their footing, the long-term consequences of Trump's actions remain to be seen. Will this be a wake-up call, a catalyst for a course correction, or will it be the harbinger of a deeper economic crisis? a self-inflicted wound from which the American economy may take years to recover. Only time will tell. But one thing is certain, the world is watching, and the stakes have never been higher.